Hello everybody, my name is Kate Olaf. Welcome to my channel and welcome to today's video where we're going to be going over some of the markets that have seen prices increasing last month. Yes, that's actually increasing, not falling, since last month. So without further ado, let's get into it. So first and foremost, we are going to be looking at an article by BiggerPockets.com, and for those of you who are not familiar with BiggerPockets, it is basically just an online forum, podcast, website that you can go on, look at anything real estate, housing market trends, you can connect with other real estate investors, and it's basically just a big real estate platform. So they wrote an article 20 hours ago from when I'm making this video, and I am making this video the 4th of May, 2023. So they made it yesterday, and it's about home prices rising in 93 of the largest 100 housing markets. Is the correction ending? So to give a little recap to this, a lot of people think that we're gonna hit a huge market crash and we're gonna see another 2008, and a lot of people have this huge fear about it. Well, this article is gonna basically debunk that, as a lot of my previous videos have debunked. And we're gonna do a deep dive into see what the actual home prices are doing. And before we get into it, I can honestly say that my market here in Sahuarita, Arizona, we have seen since the last month an average $5,000 more for the average home here in Sahuarita. So we were at, I believe it was 345,000. And then the average of April 2023 in that month recorded at 350,000. So I think it went from 345 to 350. So we are actually seeing pricing increase. It's not as substantial as we've seen the past 2 years, but we're still seeing prices increase. So let's dive in to see what some other markets are doing. So I'm just gonna read off this article and then I'll stop and talk about it if something is interesting. So let's get into it. So after 7 straight months of declining prices, the S&P Case-Shiller U.S. National Home Price Index, goodness, increased in February, and March seems to be carrying the same upward momentum. The latest data from Black Knight finds that out of the 100 largest markets in the nation, 93 had price increases from February to March, up from 79 in January, February. This, of course, is traditionally expected as the spring months tend to bring a bump in prices as home buying demand ramps up, but the rise is more than expected. A modest bump in home buyer demand ran headlong into falling for sale supply, said Andy Walden, Black Knight's Vice President of Enterprise Research. Just 5 months ago, prices were declining on a seasonally adjusted month-over-month basis in 92% of all major U.S. markets. Okay, so just 5 months ago, so in the winter months of 2022, we were seeing prices falling and they were declining, right? We were coming off a super hot 2021, 2020 real estate market, and it was all like, it was all of a sudden just everything dried up and people stopped buying for like those quick months there at the end of 2022. So fast forward to March, and the situation has done a literal 180, with prices now rising in 92% of markets from February. And I can honestly say this, I can't speak, from personal experience for all of the other markets, but it is absolutely true in the market that I'm in, just south of Phoenix. It should be noted that most key year-over-year metrics indicate a correction environment and show more similarities to the 2019 market than any of the pandemic years. As of March, only 28.5% of homes sold over list price, down 26% year over year. Price drops are up to 14.3%, up 7.7%. New listings are down 22.5%, and median days on market have increased to 44, that's plus 23 days. In short, demand is lower and more homes are sitting on the market, but new listings are also not coming online at the same rate as before, which helps explain why national prices are only down 3.3% year over year instead of more. Okay, so essentially all this getting at is that we are in a lull, right? We have slowed down, but it's not to the degree that some people say, right? Some people believe that, we're gonna see a huge crash. And again, rates are high, pricing is so high, people can't afford it, all this stuff. But the reality is just that's not the case. The fact is we are seeing a slowdown, right? The pricing is not increasing as quickly as it was the past 2 years, which would be insane if it did. So I'm glad it's kind of come down and normalized quite a bit. And the demand is lower, right? Because there's not as many homes on the market. Personally, I'm bearish about this market. I think when you have homeowners with low fixed interest rates, constraining supply, elevated mortgage rates, keeping applications down, a real fear of an upcoming or continued, depending on who you ask, recession, record low affordability, persistent inflation, banking scares, and the fact that multifamily and commercial real estate at serious risk of crashing, it's hard to be fully optimistic about the market. However, some markets have shrugged off these dilemmas, while others have taken a real hit. Real estate is local, and we have to deal with what's in front of us. Oh my gosh, I love that comment. Real estate is very so much local, okay? So when we go over some of these markets that are on the rise, we have to be aware of the current market that we're in, because it could be substantially different from the markets that we're going to be going over here. So what markets are on the rise? Despite the issues in the economy, just 7 of the 100 largest markets in the US saw month-over-month price declines. Leading the pack was Austin, Texas, which saw a 0.72% drop according to Black Knight. Among the markets seeing an uptick, Columbus, Ohio had the highest increase, 1.08%, and below are the top 10 markets. So Columbus, Ohio, Dayton, Ohio, Hartford, Connecticut, Worcester, Massachusetts, Youngstown, Ohio, Cleveland, Ohio, Cincinnati, Ohio, Akron, Ohio, Wichita, Kansas, and Toledo, Ohio. Holy crap. Ohio is just killing it. So Ohio seems to be on a very much market increase as far as pricing is concerned. And then let's take a look at the top 10 bottom markets. So these are the markets that are actually negatively falling when it comes to pricing for homes. So Austin, Texas, number 1, Provo, Utah, Boise, Idaho, Salt Lake City, Utah, Ogden, Utah, San Antonio, Texas, Phoenix, Arizona, not a shocker, Dallas, Texas, Deltona, Florida, and Houston, Texas. Okay, so what I'm seeing there is we have a lot of West Coast states. Texas, well, I guess that's kind of south, but Texas, Arizona, Utah, and Idaho. Those are very popular states, very high density. A lot of people are moving there. So that would make sense as to why their pricing is kind of falling, because it is just so dense and there's so many people moving into these markets. I'm specifically in Tucson, Arizona, so you know, I can kind of see why Phoenix has had such a small, they've had a 0.4% decrease in pricing, and that's just because they're expensive markets, very expensive markets, okay? So that makes sense why those are at the bottom. So the biggest takeaway is that the superstar markets of the pandemic boom, largely Boise and Austin, are the ones getting hammered the most. Austin continues its descent from its median sales price peak in May 2022 of $670,000 to $535,000, a negative 16% decline. That is crazy. $670,000 was their median sales price in May of 2022. So these really hot markets that people were moving to during COVID in the past 2 years, they are starting to fall at a little bit of a harder rate than some of your Midwestern markets. So that's pretty much all of the markets that we're going to be going over. And then quickly, I want to just run through the correction paragraph of this article. So what about the correction? As I mentioned, prices tend to rise during this time of year. The bigger question going forward is whether the national market is finished falling. Come winter, prices will all but certainly fall, but by how much? Have we truly reached the bottom of the market? Who knows? 2 specific factors have spurred the housing market's correction. The first is affordability. Home prices in markets across the country hit all-time highs that locked a lot of potential home buyers out of the market. This naturally leads to less demand as more and more buyers leave the market, putting downward pressure on prices. The second is the Federal Reserve's rate hike policy, which has produced 10 rate increases since March 2022 and has pushed the federal funds rate to above 5%, a 16-year high. It's been well established that the Fed's inflation battle would harm real estate and that it was sort of the point. Prices got too high for everything, not just housing, and the Fed felt they needed to act, albeit too late. Now that the correction is in full swing, affordability, which has improved ever so slightly this year, is a positive trend that can begin to work against it. So we're still having that affordability issue. That's always going to be a problem moving forward in real estate. You hear it all of the time. Where I stand with the whole affordability issue is that, again, real estate is supply and demand. It does not get simpler than any other market. You look at the stock market, it's freaking complicated. Business market's complicated. Oil market, all this stuff, it's very complicated, right? But ultimately, it all comes down to supply and demand in real estate. So if you don't have enough supply and you still have a high demand for people that want to move there in your local market, pricing cannot fall. That's why my local market, Sahuarita, We had a $5,000 median sales price increase last month because so many people want to move here, and there's only 40 homes active for sale right now out of the 7,000 that we have just in Rancho Sahuarita specifically. So when you look at the actual supply that's there and the demand of people that want to move here, it makes sense as to why pricing is not going down as many people believe it will. So moving forward, I want to encourage you guys, make sure you are keeping tabs, ask local realtors within the market, what their thoughts are. And again, just ask them how much supply, how many homes are active for sale right now, and then how many homes are actually in the market. And that'll give you a good ballpark of, okay, we're in a market right now where housing is still very high demand. And if that's the case, you can expect prices to stay, if not increase over time. That's going to do it for this video. Thank you guys so much for watching. If you enjoyed the content and you learned something, please consider subscribing. Also, comment down below what you think pricing is going to be doing over the course of this next year in real estate. If you don't already, please follow me on all my social channels at Cade Olaf everywhere. And that's going to do it for this video. Again, my name is Cade, and I will see you in the next one.